Welcome to Dad's DeFi Space. I'm Kevin, and today we're going to be talking all about the Solana network. Solana has been one of the fastest growing large cap altcoins this cycle, and we're just going to look at um, anything and everything about Solana today. To get things started, if anyone is out there using the Sanctum Liquid staking protocol, there was a security breach with it, so I would not be keeping my coins staked with that protocol. Hopefully, no one's had any issues at this point, but let's begin. I want to start by looking at X for a bit. This is an account called Coin Confessions. People will put in anonymous stories about really brilliant or really dumb things they've done in the crypto space. This one is called DCA, but didn't quite make it. I just want to read it to you. 7 years in crypto, multiple relationships ruined because I was laser focused on the industry. DCA'd, but didn't quite make it because my progress was reset with the FTX collapse. I started gambling on meme coins and because everybody was getting rich, but I constantly chose the wrong ones. Now I'm in debt, no friends. I don't even know how to make a comeback. These are the situations we want to try to avoid. And even though I've made many of the same mistakes, I did not go down the rabbit hole that much. And this is why educating yourself in the crypto space is so important if you're going to invest your hard earned capital. That is the advice for today. Now, what I would like to do next is we're going to look at some TradingView charts. We're going to look at a little bit of news concerning. Ah, we're going to look at a little bit of news concerning Solana. Solana based protocol Sanctum announced a major security breach. Basically, what has happened is the Sanctum protocol, which is a liquid staking protocol on the Solana network, lost control of its primary domain. Would be a phishing attack. So if someone were to use the address, it may take them into a wallet drainer. Their crypto is gone now. This is just a lesson to stay safe out there. Check links, don't trust, verify. Those are things that one must do if you're going to stay in this space for any period of time and not just, collect coins on Coinbase or something. Um, all right, enough about that. We're going to take a look at the Solana charts and some other macro metrics right now, or actually look at some macro metrics right now. I wanted to share a chart that a lot of people don't consider looking at, and that is the DYX or the dollar chart. What you're looking at right now is the weekly US dollar chart. And as you can see, we've been chopping around sideways between 107 and about $100, really for the entirety of the last year and a half, or excuse me, year. Um, it's a great chart to watch occasionally because when the when the dollar chart falls, the crypto market cap and Bitcoin, of course, go up. So this is an excellent chart that tends to run inverse to the crypto market. So as the DYX chart is going up, crypto market tends to go down, and as the crypto market goes up, the DYX chart tends to go down. So when you start to see the trends in the chart, it'll give you a good idea of when to dollar cost average, when to hold, and it's something that I'll look at probably not every day, but at least a couple times a week. Enough about the DYX chart today. I don't really want to get into technicals on it. What I wanted to talk about is Solana. So with the Solana chart, you can see that our support and our resistance over the last few months, all the way back to the beginning of the year, has been ranging between 119, just under 120 and just under $210. This is why this has been an excellent wide range to run on concentrated Solana liquidity pools, specifically on Raydium. Um, if I go to my indicators and I add in the bull market support band, you know I love to use this one. You can see that on the weekly chart, we are still above the band. At least we're working on our second week right now. Now, here is my thesis. If we are not able to maintain the bull market support band and we break back below this, I'm going to be a little nervous. But as long as we maintain support above this $120 region, I am good for the rest of the entirety of the bull run until the crash starts to occur. So these are two alerts that I have on Solana right now that are, to me personally, extremely important. Now, what I'm really looking forward to is as Solana can maintain resistance, or excuse me, when Solana can maintain support above the 210 region. Something to think about as you make your decisions in this market. Now, the bigger question in the market is, what is Solana going to do? Because truly none of us out there, whether we are like me, average to okay in technical analysis, or you're brilliant, nobody can predict what's on the right side of the chart. Nobody predicts the future. So you have to start to learn some of these techniques yourself, and that can help you have higher conviction in your investments. But I wanted to examine why has Solana been so strong this cycle? Okay, I'm going to zoom out so you can see the entirety of Solana's run since last cycle. Basically, a big O smile here. Now, we all wish we were buying Solana after the FTX collapse at around $10 or less. I did buy some at that price, not near enough. And to be quite honest, I took most of my profits around $50. But hey, it's always better to take a little profit than to hold on to your bag until the next bear market. But you can tell once we got above the 120 region and we skyrocketed all the way up to our resistance point at around 210, there was a big O dump. Kind of beginning around March 18th. We are getting closer and closer and closer up to that resistance line again. So we all really have to pay close attention to this 210 region. This is whether you're keeping most of your Solana in a spot position or trying to earn yield in a liquidity position, because those metrics must be taken into account when we make decisions of whether to buy, sell, or hold. On a final note, Solana is one of my strongest large cap altcoin conviction plays this cycle. I expect it to extend up a similar time frame and a similar distance that it rose from the depths of the FTX bankruptcy. Now, I'm not a big fan of price predictions, but putting all the information together, and understanding the fact that there's a lot of institutional, I don't want to say adoption, but curiosity and movement in the Solana ecosystem. Solana's metrics, total value locked, and any other metric you look at is just off the charts compared to most other chains. I would expect Solana, and again, I don't like price predictions, to reach somewhere between at $600 to $700. Now, if you take the full extension out, I don't see Solana getting much higher this cycle than 1,000. But I really don't think we're going to have the gas in the tank to make it all the way to 1,000. And that doesn't mean I'm holding my position all the way to $600. I will ladder some out at 200, some at 400, and then some. The closer we get to that target of $600 to $700, the more of my Solana bags I'm going to unload. Now, none of what I'm saying is financial advice. This is just what I plan on doing. But what I do suggest you do is have a plan. Have a plan. Have a plan of where you're going to start laddering in. Have a plan where you're going to start laddering out. Have a plan for what you're going to do with your profits so you're not thinking, oh man, it's still going up. I need to ape back into the market. I've made that mistake myself too many times. I appreciate each and every one of you for taking some time out of your day to watch this video, and I hope you enjoyed the content. So please support the channel. Use our links below to help you in your crypto and investing journey. Before the end of the video, though, I wanted to bring up one more piece of Solana news. It's from the Bitcoinist. And that is Solana and Cardano were dropped as securities in the SEC Binance update. See, in the Binance case that the SEC had, the case that the SEC had against Binance, Solana, Cardano, a bunch of other altcoins were listed as securities. Shortly after this, many of them tanked. You would expect that Solana would skyrocket after this news, but that's not what happened. After this news was released, Solana has taken a 5% dump. But the real story here is, should we really care? Yes, you need to follow the news. Yes, we need to look at technicals. Yes, we need to examine the fundamentals of a coin, a team, the tokenomics. But some of the most important things we need to look at is the sentiment and the momentum. And that's part of the reason I like looking at the technicals so much, specifically support and resistance, the bull market support band, and the stochastic RSI. There's many other indicators out there. Those are just ones that I use the most. So does the news really matter? Yes, it does. But a lot of times it matters for the whales out there because there's a lot of market manipulation going on in this place. A lot of market manipulation going on in this place. Many of the big holders out there love to use these news events to either pump and dump the market. Retail gets scared. They sell their bags for a loss. Going back, just like obviously this guy in Coin Confessions was doing. And then they get cheaper assets. It's the same game that's played in every market known to humankind. So in the end, we need to learn to control our emotions. We need to come up with our own thesis by doing our own research. And we need to make sure we're paying at least some attention to the charts so we understand the support, resistance, and the momentum of the market. Now that we've discussed Solana, I just wanted to take a minute at the very end to look at some of my Raydium liquidity pools. See how they're doing. So what I'm doing right now is I'm going to bring up Raydium Network. Raydium is an excellent DEX on the Solana network, one of my favorite. I tend to use Jupiter, the aggregator, though, because I want my transactions routed the cheapest way. Again, that's something we have to look for when we look at liquidity pools, is what's the fee structure. Those transactions tend to be routed into the cheapest route. I want to go into my portfolio. We're going to look at some of my concentrated liquidity pools. Right now, I only have two, and one of them is pretty small because I withdrew my Jupe and Pith pool. Market has gotten too volatile, and once it settles down, I'll reestablish my position. But I want to show you again my Sol USD pool. It's in range, and right now I'm about 3/4 USD, or no, I'm 88%. In my Sol USD position, I'm pretty much 2/3 dollars and 1/3 Sol. That's kind of what I'm the upper end of the range. I like my position to stay as much Sol as possible, and it's getting converted right now. So if the market has another drop, I may consider rebalancing this position. And right now, my 24-hour fees are 88% of trade fees, and I'm making 11% of the yield off of Raydium token. And then what I'm doing is I'm going to slowly take my Raydium token and add that into a Solana Raydium pool and let that earn yield also. Um, I don't have a lot of yield built up right now because I've already harvested. And please be sure to check out my Raydium video that I previously made, where I actually go into detail of how to establish these positions. Um, I hope you liked the content today. Please smash that like button, subscribe to Dad's DeFi Space, and until next time, guys. If you'd like to learn more about crypto and DeFi investing, such as yield farming, providing liquidity, or lending pools, check out the links below for Crypto Labs Research. They offer a free DeFi course. They have the UIG, Underdog Investment Group. You get 20% off your first month and grow your portfolio and yourself.